Okay, thank you. Thanks for joining us tonight for the webinar Wool and Sheepmeat, Market Trends and Securing Access. My name's Ian McFarland and I'm one of the Sheep Connect team. So today's webinar does not happen without the support of Australian Wool Innovation, the SA Sheep Industry Fund and the Department of Primary Industry and Regions. For more information on Sheep Connect SA, please visit our website or follow us on Twitter. So today's webinar is also brought to you in collaboration with the South Australian Livestock Biosecurity Extension team consisting of Penny Keynes and Emily Buddle. And I'll pass it over to Emily just to give a brief introduction to themselves and the Biosecurity Extension project.
Thanks Jodie and Ian from Sheep Connect SA team for inviting Penny and I to help pull this webinar together this evening. So as Ian said, my name's Emily Buddle. I'm employed by Animal Health Australia and delivering key outcomes out of the National Sheep Industry Biosecurity Strategy. And my colleague is Penny Keynes. So Penny is employed by Livestock SA through funding received through the Red Meat and Wool Growth Program that is currently being run out of PIRSA. So we're working collaboratively to help South Australian sheep and beef industry to enhance their animal health and welfare, improve productivity and profitability, and to secure market access by strengthening biosecurity across the supply chain. So we will be floating about the place for the next few years to work collaboratively across the supply chain and with producers in any capacity required to help strengthen their biosecurity and animal health on farm and within the supply chain. So thanks Ian and Jodie for the opportunity.
All right, thanks Emily. If anyone has any biosecurity related questions, please feel free to put them in the Q&A box. So I'd like to now introduce our two main speakers for tonight. We have Michael Avery, who's a wool specialist from Southern Aurora markets. Michael's has more than 35 years experience in agricultural industries. He's held key positions in a number of peak industry bodies and organisations, and Michael's key strengths lie in risk evaluation and mitigation, core processes and supply chain education. We also have Tim Ryan, who's Manager of Global Trade and Development with MLA, based in Singapore. Tim has worked with MLA for the last 6 years across various market research and trade development functions. And Tim works with MLA's international markets team on trade and market access priorities, as well as monitoring global trade developments and the competitive environment. Tim also works across a range of programs to alleviate tariff and non-tariff barriers. So I'd now like to hand over to Michael to give us a brief around the wool industry. Over to you, Michael.
Thanks very much. Thanks for the opportunity to speak this evening. I'm just going to talk fairly briefly about price risk management in general and in the wool industry in particular. It is a hot topic at the moment. And we'll just quickly go through. Now, risk management has been identified as one of the key challenges facing Australian agriculture over the next decade. With that, the AWI has commissioned a revision of their price risk management content for their website and with WoolQ. And also key to that is the National Farmers Federation and their 2030 roadmap, which has identified risk management as one of the 5 pillars to their target. Their target in that pillar 5 is for 90% of Australian growers to have some risk management in their agricultural planning. And that's a fairly heady target, as will be pointed out as we go along. Now, agriculture is one of the most volatile sectors, and we'll cover that as we move through the slides. We'll look at the global implications, where agriculture and Australia sit globally and then locally. Look at this first slide. You'll see the index of volatility of national agricultural output, and Australia is, and these figures come from the Outlook conference of a couple of years ago. They just give you a picture of where agriculture sits, Australian agriculture in the world, and agriculture in general in Australia. So if we look at, which is probably the most important, we're talking about sheep farms in both wool and meat, and you'll see that price risk is a dominating factor in the change of cash income across farms. And this is why we've highlighted, or the NFF and AWI and government have highlighted that a better uptake of risk management is an important issue. So now if we just talk about price risk management, because I think when people talk about risk management, the story gets very complex, and while it is a deep topic, the principles aren't really that difficult to come to terms with. And in price risk management, we're talking about margin management, because price really isn't the most important thing for a successful business. It's the margin. And historically, wool, like many other agricultural commodities, is highly volatile. I started, as Ian mentioned, in this business almost 40 years ago, and one of the first lectures I went to said that they asked the question on which was the most volatile commodity in the world, and people put their hands up and no one got it. I thought, well, I might as well have a stab. And I'll say, well, how about wool? And they said, no, it's the second most. The most volatile is onions. And I just thought, well, at least I'm not in the onion business. Anyway, hedging price risk management strategies are designed to minimise exposure to market risk with changes in supply and demand and price. And hedging products such as wool forwards need to be simple to understand and versatile in their application. And this is probably where we find ourselves in the wool space. I don't think many people understand, and probably the older growers that are old as me will recall that wool has a rich history in forward markets and in the futures market. And the establishment of the Sydney Futures Exchange was actually the Sydney Greasy Wool Futures Exchange in the 60s. So wool growers in Australia and sheep farmers in Australia have always had an interest in forward markets and forward pricing. And the important part of that is that one of the, I suppose, cornerstones in agricultural markets is that if you've got a strong commercial trade market like we have in wool through the auction, then it should lead to a forward market that does provide that forward pricing signals, so growers can hedge their commodities. As I alluded to earlier, in Australia, there's a very low uptake, especially of domestic hedge products. Through Chicago, there was wheat and cotton products that were hedged forward, but in wool, in beef, dairy, there's a lack of products and a lack of uptake. In wool, we've had, as I said, the futures exchange since the 60s, which terminated in the early 2000s. That's been taken up by, first of all, Macquarie Bank, that was operating during the futures exchange, then the CBA and the National Australia Bank with their over-the-counter products, and in more recent times, in the last 5 or 6 years, by the Financial and Energy Exchange, which has devoted most of its platform to agricultural products. And our business, Southern Aurora, is involved with the exchange in trying to develop those, and with the federal government and the ADF, we're looking at launching a dairy contract by the end of this year. Now, getting back to the wool market, what are the drivers? How do they change? And how do we try and find all these drivers? And how, when we do find the information, how do we interpret it? Now, the main drivers in wool is, and none of this will come to surprise to anyone, are the macroeconomic forces. And then we've got the regional issues. I'll just make it's one of my sort of favourite sayings when trying to explain how you go about navigating the future and risk. And it was Donald Rumsfeld in the time of the Gulf Wars that when he was challenged, he said, well, there are known knowns, there are things we know that we know, and then there are known unknowns, and that is things that we know that we don't know. And then there are the unknown unknowns, and these are the things that we do not know, we do not know. Now, if that doesn't confuse you, nothing will. But if we try to break that down and work out what Donald was trying to say, well, it's quite simple, really. Unknown knowns are the stuff that we can find data for, and either historical or current, to know where the prices are, where they sit historically, where the forward curve is if we've got a forward market, and what our cost of production. And all those things are tools that we can use to make good decisions about risk management. Our unknown unknowns, a little trickier, future supply and demand. Well, if you've got good data, you can make good estimates, but as it's said there, it's unknown. Your production costs upstream, downstream, energy, effluent, all these things change. And then are the black swans. So I guess this year, if you ever wanted a black swan year, it'd be the year 2020. But when I first started doing these talks, probably the most topical was the Rift Valley fever in South Africa, and its impact on the wool market. And its impact for Australia was actually, strangely enough, quite positive, because there was a moratorium on wool from South Africa going to China. So all the focus came on the Australian market. And this sort of alludes to the people that are helping with this speech tonight on the Emily and the biosecurity team. That type of biosecurity issues are an important part of the market, and we've seen that with COVID and the pandemic, and the outcomes of that, of course, in the Rift Valley was a rally in the Australian price. In 2019, we had the loss of confidence in the market due to the tariff conflicts, and then complete demand destruction and a pandemic-led consumer shutdown this year. Now, they were termed black swan events, and I guess being Australian, a black swan's not a rare thing, but that's the saying. And if we have a look at how we can look at mitigating some of this price risk out of our production system, then it's not just what we're talking about, data and understanding data. There's other things that we have to assess and add into that. And that's the pipeline education about principle and strategies, the access to data. I think that's an important thing that AWI are working on at the moment, is trying to improve the information hub and the access to good, solid information. Improve the one failing I think we have in Australia in wool especially is good stock to use data. You know, most of you would understand that during this recent price fall, there has been a build in stock, but it's a very nebulous number. You know, it's collected ad hoc. how much wool is in shed, how much wool is in brokers' stores. The export data is exact, but if you don't know what's happening, you can make some things. But if you look at other commodities, global commodities, then that number's very, very exacting. And it's much harder to source in other commodities than it is in wool. We're the main driver of apparel wool in the world. We produce over 70% of the world's apparel wool. We have one very dominant destination in China who in this last year took well over 80% of our wool, and is taking even more at the moment, with some of the major other markets, competing markets against China, India and Italy, still having struggles with the pandemic. The other mitigator for price risk, I feel, that is outside of the actual forward price hedging, is in product differentiation and the issues around provenance, traceability. As I said, biosecurity. When Rift Valley fever did occur, it shone the light on what we needed to do, things around FMD and other potential things, and how we could deactivate those problems, how we could properly trace, and really importantly, having agreed protocols with our trading partners. So if something did happen, they knew what we were going to do, they'd signed off on how we will do it, and that business and flow could still remain in the pipeline. This is just a most recent, and it's the data that goes back the whole time I've been in the wool industry, which is interesting. And we're talking about macro effects. Well, most of these big bumps in this slide, if you look at this one here, which is in the late 80s. This is the one probably you all remember, with the floor price, where we had first of all a change in the floor, and then it dropped straight down to the new floor level, and then the immutable floor was removed. And we had things like the Asian financial crisis, 9/11. Now, if we go to the Rift Valley fever here, which was 2010, here's the positive move that all supply requirements had to be sourced out of Australia. This followed the GFC, and I don't think any of you need to be reminded about this slippery slope that we've been on recently, and the volatility that anyone in the wool industry has had to put up with over the last 5 years. And here was the effect of some of the US trade negotiations and deals and whatever tariff headaches Mr. Trump wanted to cause. And this, of course, is the pandemic and the bounce back off that that has been a little short-lived. Market came back a little bit more this week. And I think the strong economic growth is what drove this. What probably started the decline is not being able to compete against other fibres, and we'll cover that in a moment. This is a slide from Kinsey's, which is on the effect of a pandemic, and this was a report just out a couple of weeks ago. And what really knocked me around is very visually, aerospace, petroleum, very badly affected by the pandemic. Little less understated is the effect of apparel, which a lot of Australian wool, and is actually ranked the highest effect of a pandemic. This other slide, which is taken from the very recent work done by the AWI, and something that we chart as observers of the market, is the wool to cotton ratio. We used to live very comfortably in this 3-to-1 ratio. Wool has taken some big steps over time, and I think this is where we're looking at differentiation now in price. We got up to 8-1 during the fact that during the rally in prices over the last 3 or 4 years. In effect, this chart doesn't help. We actually topped out one day in late 2018 against New York cotton at 9-1. Now, some of these charts do take a little bit of interpretation, and I'm mindful of the time. We haven't got a lot left. But these are the things that I think that we should be trying to access through WoolQ and through the other data carriers. This just a couple of 40-year charts now. You'll see this is a 19 micron chart. This is a 21. Probably can't see a lot of difference between the two, but if we separate the two in something that's the term basis, so the difference between the price of 19 and 21, you'll see that there is other ways to look at risk and how you should be handling it. This goes back the full 40 years, but you'll see during those periods of strong rises, the difference between 19 and 21 microns blew to 1,000, stayed very consistently through this period where prices were low in sort of averaging 40 to 50 cents. Again, through that period of I said, those strong rises in the last 4 years where it blows out. So when making your hedging decisions, whether you're producing 18, 19, 20, 21, 22, you really need to look at the relationship between the microns to see what's the most advantageous path to take and strategy to take in your things. We spoke about volatility. There's an easy graph on the price movement on a daily basis over this longer term. And you can see it's a very wide move around the average always. So the idea of trying not to rely on one price at one single time in the year, I think is important to the outcomes of a successful business. And this is one we just did up this afternoon, is looking at that volatility from a daily viewpoint, because we've really had issues with people and they're getting their maturities exactly right, because this is the number of instances where the market has moved more than 30 cents on a single day. And you'll see that this year, the year of 2020, we've had 29 instances, the same as last year, but well and truly above the average, which is around about, we should have only 10 of those movements. So volatility, unfortunately, is something we've got to live with. The other charts we look at are percentile charts, which is the time that prices spend in those ranges, and that's where we're sitting at the moment, just over half the time over that 40-year period. Now, I think we're running out of time here, so I'll wrap it up here with just the last slide showing this is where our Chinese is dominating the market, India, Italy, and the Czech Republic, and this is dramatic change from the last decade. I think we'll just finish it there, Ian, if that's okay.
Yeah, no, that's fine. If anyone's got any questions, please put those in the Q&A box. We do have one question at the moment around what's the size of the South African wool market compared to Australia?
Oh, that's a really good question. We can do them in order, I guess. South Africa would be probably about, I would think, 10 to 15% of Australia. So roughly a tenth to so Australia's running around, if we do it in round figures, because I have not a calculator near me, Australia'd be 2 million bales, and I'd imagine we're looking at sort of 300 to 500,000, somewhere in that area for South Africa, but I can certainly quickly look it up for you.
Yeah, no, that's fine. We can perhaps provide that information later.
Yeah, it's if you're looking at wool countries, then probably the order would be Australia, New Zealand, South Africa. It's a bit like our rugby in reverse almost. Australia, New Zealand, South Africa, Uruguay would be the top four. And tend to talk wool for apparel, interior and exterior uses. There's bigger sheep populations than that, of course. China being one of them, but very, very little of it goes into the textile industry that we know.
Okay. Now, Mike, there's a question around tracing of wool in Australia. How well do we do this as an industry compared with other commodities?
My personal opinion is we don't do it well enough, and this is on a number of levels. I think there's a lot of work going into ID, into RFID, and other things if we're I'm not sure if the question is specifically aiming at the NWD. I think that the take up has improved over time, but very, very slowly. If we're looking at the impact, we looked at some of those basis things there, which is a difference in prices for different microns, which is the biggest. About 70% of wool pricing is decided on fibre diameter, but an increasing amount is on other side issues other than fibre characteristics, and that's animal welfare. In the finer end, you're probably looking at non-mules wool having a premium of 40, 50, 60 to $1 on the super fine end, in the specialty types, and the broader ones 20, 30 cents. Modest premiums for pain relief. And all this can only be driven by data, and that data comes through the NWD. And my personal belief, and this is very much just my personal belief, you can't sell livestock without its paperwork, and I really think that should be the same with wool and how it is prepared and handled, and if we really want our customers to understand that.
Thanks for that, Michael. I guess related to that, a question around, are we producing the wool that the market wants?
That's probably one of the most difficult questions I think that you can ask. The pipeline in wool is very long, and that feedback is very difficult. As a exporter for 20 years, I don't think we get that message. We ever got that message back from our processor clients, and to no great extent, and therefore it was very, very difficult for us to pass that back to the growers. The participation chain is so long. I think we're getting better and better at it. I think in the last decade, I think I mentioned about product differentiation. I think we're getting the message that we can't compete obviously on volume against other textile fibres, but we can on fibre quality and provenance and its characteristics, and we've got to communicate better with the end user to find out what those are and communicate that back to the growers. And I think the right work's being done in that area now.
Yep, I guess related to that, what % of consumers want that provenance information?
It's interesting. probably someone from AWI, John Roberts or someone would give you a more accurate answer. I think in Europe particularly, there's a lot about that. I certainly think that this year has highlighted the need for that. We're seeing. I think we were seeing a move away from fast fashion and onto more sounder natural fibres, but it's a slow uptake. I think this is going to this health position that the world's in is going to change that thought process about fast fashion and about durability and about care of products, care to the environment, about the clothes you wear. And so I think there's going to be a change, and we're even hearing that already from some of the Italian processors that and fashion houses that are saying that they're reducing their number of shows and their turnover of cycles, where there was 5 seasons and they're going to be cut. I always thought there was only 4 in a year, but apparently there was 5. That it'll be reduced to maybe only 2 shows a year. That will be more dominated about multi-purpose clothing.
All right,
Just on that, there has been a couple of initiatives, and if those listening tonight, Giovanni Schneider, one of the large European exporters or importers of Australian wool, are having a free seminar for growers, I think in the early part of October, and obviously Zoom. And that is available for free to growers, and I think it's a small cost to organisations and things of about $50 US, I think. And it's they've got a list of speakers together from the fashion houses and from the retailers wanting to talk to growers and wanting to put that very point forward. And I think that'd be very interesting for people to do. I can get that information for you, and make it available on your website.
Yep, no, that would be great. Thanks. Just one last question before we move on to our next speaker. Someone would like to know if bold crimpy wool is more sought after than flatter types. That's wool of the same micron.
Oh, that's so. Who's talking soft rolling skins, or I think it's more. It really depends on the micron you're talking about. I don't think bold has any premium. I go back long enough to when I was at university. There was just we were just studying about the machinery, and so we had wool metrology labs, but we also had a wool class where we were looking at the crimp to define fibre diameter, and one of the probably negative descriptions was bold, and that was oh look, it is bold, but it probably will test a little finer than it looks. But it was worrisome for the appraiser, because it might not sit well with the end user, that it might be the right micron but be a bit bold. And I don't think there's been a swing, to my understanding, a swing away from that. So I would say there's certainly what it measures is what you need. It's a combination and down the fine end, obviously, of handle, but I don't think there's any premium for bold wool that I understand, but I could be wrong.
All right, thanks, Michael. If anyone's got any further questions, feel free to put them in the Q&A box, and we'll come back to Michael a bit later. So I'd like to now hand it over to Tim Ryan, who will cover the sheep meat industry component.
Thank you all for your attention tonight, and thanks for the invitation from Em. My name is Tim Ryan. I work for Meat and Livestock Australia. I'm actually based in Singapore. and work within our international markets team, primarily on a range of market access issues. So I'll get into the presentation in a moment, but just quickly, for a bit of context, just to reinforce kind of MLA's role within the industry and what we actually do. So our primary, I suppose, goal is to underpin producer profitability, sustainability, and the global competitiveness of the industry via two key pathways. Firstly, we invest in research, development, and adoption from paddock to plate. And also we are the key marketing body for Australian red meat, be it goat, sheep meat, or beef. And that's where I fit more into the story, primarily looking at where we can improve market access to complement our marketing activities to drive demand for our product. So that's the role of MLA. In terms of tonight, I want to cover off on three key topics. And this presentation will primarily talk about market access as opposed to market developments. But if you have any question on how the markets are evolving at the moment, I'm happy to take questions on those as well. So firstly, I'll discuss why market access is important for the Australian sheep meat industry. And increasingly so, we increasingly rely on overseas markets to consume more and more of our product. Secondly, I want to give you a bit of a picture of how industry approaches market access. And from my perspective, I mainly work in the space of addressing tariff and non-tariff barriers, but it's also just as important to discuss the integrity systems as well, and the biosecurity that we have to ensure that we don't compromise our existing market access. But I'll run you through how we approach market access more broadly. And then thirdly, I want to give you a bit of a picture of how market access is tracking for Australia. At the moment in the market, there's a lot of volatility and risk, but we're quite fortunate to have pretty good market access gains under our belt to shelter us from some of that volatility. So firstly, in terms of why market access is important, we're increasingly an export-oriented industry. This chart here looks at Australian sheep meat exports over the last couple of decades and where we're forecasting them to go going forward. And even though the sheep flock's much smaller than it was at the turn of the century, our lamb production particularly continues to grow year on year. This year we're expecting a bit of a decline, but over the longer term we are expecting that to continue growing. So all this growth that we continue to put through the system primarily finds a customer overseas given our fairly limited domestic market. And then the chart on the right hand side just shows the share of our production that is actually consumed in an export market, and this is both lamb and mutton combined. But we're actually pushing past that 3/4 mark, and coming up over the next few years, we're expecting about 80% of our sheep meat to actually be consumed in an export market. So having consistent and reliable access to those export markets, which is underpinned by market access, is really important for us, and it's increasingly important for the industry. Another reason why market access is really important is the level of volatility in global markets at the moment. The last couple of years has seen a huge amount of forces push global trade in all sorts of directions. We've seen a lot of trade uncertainty coming out of Trump and trade wars. We've also been through a fairly substantial drought for parts of the country, which has meant that we've seen increased supplies coming through the system that we need to find a market for. And of course, more recently, we've seen the impact of COVID-19 and the economic recession it's triggered across the world. We've seen that impact the Australian sheep meat industry as well. So having diverse access to markets and a healthy export portfolio of many markets is really important to shelter us from some of this global trade risk. And on the right-hand side, this is the overall mix of markets that we sent product to last financial year. It is dominated by the US and China, but that's also fairly well offset by a range of other markets right across the Middle East, as well as Europe and Southeast Asia. So while China and the US loom quite large, they're still operating in a fairly competitive export market mix. A third reason why market access is important, and increasingly so, is that we're dealing with a very expensive product. When we look at the change in sheep meat prices versus the other meat proteins, which is the chart on the right-hand side here, we can see how much the price has increased over the last 2 decades compared to those main competitors. So increasingly, we need to get consumers or to fork out more of their cash on Australian sheep meat. But another way to remain competitive is to strip out costs from the supply chain. And that's really about removing things like tariffs and non-tariff barriers that add unnecessary costs once our product gets to a market. So market access for the industry is really important. I now just want to touch base on how industry as a whole works to defend our current market access and also improve our market access overseas. In terms of what we use as a priority or see as a priority is really laid out by the Red Meat 2030 strategic plan. This was a document put forward by RMAC, the peak industry body, and it really lays the framework for 2 key priorities. One, addressing economic barriers, and that's things like tariffs and quotas, and the second, addressing technical barriers, and this is a very broad range of non-tariff barriers. So these two key priorities, what we use to formulate our own strategy at MLA and how we work with the broader industry. So firstly, on the economic access front, the goal is to have 90% of our sheep meat and red meat exports more broadly covered by some kind of trade agreement, such as an FTA deal, which we've made good progress to date, but we've still got a bit of work to do. But as we remove things like tariffs and quotas, that's where we come up against non-tariff barriers. And this is a fairly diverse and messy mix of range of issues that make it more expensive for us to get product into our export markets. So the second goal there is to reduce the impact of these barriers by $1 billion over the next decade. So that's the broad goal which we're all pushing towards. And MLA is part of that story, but we're not the only stakeholder in this market access mix. It's a very broad coalition of industry and government bodies that are all important in pushing in the same direction to make sure that we defend what we've got in terms of market access and move the dial forward. So in terms of the various bodies, there's the likes of MLA, as well as the other RDCs like AMPC and LiveCorp. There's the various peak industry councils, as well as the state farming organisations like Livestock SA. There's Animal Health Australia. And then really critical in any of this is working with overseas governments as well as our own, given that most of the issues are come down to various forms of regulation. So it's really about driving an industry-government partnership. In terms of a few of the key priorities for us at the moment, on the economic access front, it's really the 2 key FTA negotiations underway at the moment between Australia and the EU and Australia and the UK, and they're progressing, and they've just finished one round of negotiations with the EU. But looking forward as well, other opportunities for improved market access exist in the likes of the Gulf Cooperation Council, which is the likes of Saudi Arabia, the United Arab Emirates, Qatar, Bahrain, as well as a couple of other countries in that region. And longer term as well, getting access into the Indian market for sheep meat. And then there's this very broad array of non-tariff barriers that we aim to address. 3 key regions where there's the greatest prevalence of NTBs is really China. And the top priority there is really getting more plants accredited to supply that market and getting also more plants accredited to supply chilled product. The Middle East is also a very important market for sheep meat, and the priority there is alleviating some of the fairly restrictive shelf life barriers that we face in the market. And then in Southeast Asia, there's a very broad range of NTBs, but halal requirements are fairly high on the list as well. So these are some of the tariff and non-tariff barriers, but equally as important are the biosecurity measures and food safety that underpins the whole system. And this is where you as producers really play your role in the broader market access system. And this is delivered through the Integrity Systems Company, which is a subsidiary of MLA. And for you as producers is really through the form of LPA and NLIS. And these two systems, while you might not think about it every day, but ultimately they're all about underpinning our existing market access. So LPA is really about ensuring that what we send overseas to our export markets is safe, and we're not going to send anything that has potential residues of products that are beyond thresholds in export markets. While NLIS is really about ensuring that we have appropriate traceability of animals throughout the system to, one, trace back if there's an issue, but also ensure that if there's any kind of disease outbreak that we don't necessarily compromise our market access and we can trace the animals that are in question. So while there's a lot of activity going on at an industry body level, market access is just as important for producers and their everyday activities. So that's a bit about how industry approaches market access and what our priorities are. This last section, I just want to run through how market access has developed over the last few years and how this has impacted prices for you as producers and what are the kind of the next steps and priorities going forward. So firstly, if we look at the economic access front, this is the tariffs and quotas and free trade agreements. This space has actually seen a lot of success over the last 2 decades. This chart on the left-hand side is one I've stolen from ABARES. And this just looks at the various trade agreements Australia has with our key export partners. And some of them we have multiple agreements with. So for instance, Malaysia, there's 3 different overlapping trade agreements that have all reduced barriers to that trading partner. Or some like China are purely underpinned by a bilateral free trade agreement. But across the board, these various agreements with our key export markets has meant that unnecessary tariffs that are applied to Australian product or quotas as well have been removed. So in terms of that longer term 2030 goal of having 90% of our trade covered by one of these trade agreements, the right-hand side chart just tracks how we're actually progressing against that target. And the yellow line looks at the share of Australian sheepmeat exports that are covered by a trade deal. And the red dashed line looks at total red meat exports more broadly. But since the early to mid 2000s, we've seen a fair few important gains, firstly with the United States and ASEAN, and then more recently with the likes of China, Korea and Japan. So at the moment, we're sitting at about 70% of our trade covered by one of these trade agreements. And over the next 10 years, particularly with the current trade agreements under negotiation, we should hopefully get to that 90% target. So in short, the trade reform space in terms of FTAs has been quite positive over the last 2 decades or so. So what's this mean for you as producers? Well, a lot of this trade reform has coincided with a period of improved pricing. So it's not just about reduced barriers that have driven prices. There's a range of other factors, but what the barriers or reduction in barriers has meant is that when we've seen strong global demand and growing global demand, we've actually been able to respond to it and tap into it. So here we have the average price of trade lambs in Australia over the last couple of decades, and particularly since we saw some big trade deals done in the mid to late 2000s, we've seen that coincide with a fairly steady increase in average lamb prices. There's also been a softer Australian dollar and a range of other things, but these free trade agreements have allowed us to tap into this demand. So just looking at, I suppose, what the global access picture looks like. Here we've got Australia's average tariff applied to, or the average tariff applied to Australian sheep meat around the world. In many of our markets, especially where we have a free trade agreement, these tariffs are declined, so that's represented by the green areas. But there's a few hot zones you can see, particularly Africa is fairly protectionist, but most of Africa also doesn't really have the purchasing power to really afford Australian sheep meat. But the key zone here is looking at Europe. Europe is a very protectionist market, but it's also a very attractive market for Australia. It's got a very large and deep pool of wealthy consumers, and consumers that are relatively familiar with sheep meat as well. So really the UK and Europe are the priorities in terms of market access, trade agreement, trade reform. But while this tells a relatively positive picture, that's where non-tariff barriers come into the play as well. So looking at some of those key regions like the Middle East, China and Southeast Asia, at a tariff level, they're quite positive. There's not that many tariffs that inhibit our trade. But at the same time, there's a lot of non-tariff barriers. So like I said, in the Middle East, there's fairly restrictive shelf life. In South Asia, as well as the Middle East, there's fairly stringent halal requirements. And in China, it's really around restricted plant access or approved establishment access that limits our ability to fully respond to demand in that market. So while tariffs are low, non-tariff barriers are an increasing issue for our industry. So in terms of the main priority on the economic access front, it's well and truly the EU and UK negotiations underway at the moment. They're both attractive markets in their own right, but we are navigating what is a fairly sensitive topic. The Europeans generally see most of ag and particularly most meat products as falling under that sensitive category, which does make or complicate a little bit seeking improved access. But the UK as well is a very attractive market. It's our largest market under our existing access within the EU, and we've got strong historical ties with the market as well. They have traditionally been a fairly substantial lamb leg market for Australia. So while these negotiations go on, there is a bit of complication in the form of Brexit. The trading relationship between the EU and UK is still really unclear, and there's also a lot of sheep meat going both ways between those two countries. And depending on how that access lands, that could complicate, I suppose, our positioning in the market and our ability to compete, as well as what our ultimate access could look like. So that's the economic access. In terms of some of that technical or non-tariff barrier access, I thought I'd finish on a bit of a positive, and there's actually been some fairly good news come forward in this space just this year. So when we look at the Middle East market, there's fairly restrictive shelf life requirements, and a lot of that is driven by consumer concerns about making sure what they're consuming is really fresh. Within those parameters, we have to air freight a lot of product into the market, which is very expensive. And also when you have a pandemic and the global airline industry collapses, it basically means our main freight mechanism to these markets is largely eroded. So getting access to the Middle East has been a challenge this year, but some of them with concerns around food security have loosened up those shelf life requirements. So in some ways, COVID-19 has been a bit of a catalyst to fast track some of the things we've been working on in the region for a number of years. That's the bulk of my presentation. I'm happy to take any questions as well, but I hope you've got a bit of an understanding of why market access is important for us, how we approach it, and how we're tracking so far, particularly against those 10-year goals. Thank you.
All right, thanks, Tim. A couple of questions, and please feel free to put more in the Q&A boxes. A question around, why the focus on getting sheep meat into India?
Yep, and we need to be careful. India is a massive market, and could potentially evolve into a lucrative market. But really the focus at the moment is the EU and UK. Under current market conditions, they're far more attractive than the likes of India. That said, India could become an attractive market for us, and it's something we want to explore, and something that industry would have to, I suppose, foster into a bigger market. At the moment, there's fairly prohibitive tariffs and non-tariff barriers preventing us from sending any product or much at all to that market. But also we need to be mindful of what role we'd play in that kind of market. If we're looking at the amount of people that can actually afford Australian sheep meat in India, there's probably a lot more people in the likes of Korea, for instance, than there are in India at the moment. So we just need to be mindful that we don't get overawed by the sheer size of the market in terms of people. We need to be mindful about what they can actually afford in determining how big that market could actually be.
All right, thanks for that. Yeah, a question around an earlier graph you showed, which predicted an increase in numbers or meat over the next few years. And given the decline in sheep numbers and probably ewes mated, what are some of the key factors that MLA believe are going to actually make this feasible?
So I suppose that the key driver of that short-term reduction that we've seen a bit this year, and we're expecting to probably linger into the new year, has been that drought and the reduced flock base we're working off. There's probably two key factors we're assuming going forward. One is that the strong prices and improved seasonal conditions will mean that over the next few years that flock will recover slightly. But also on top of that, probably improving flock base has been the productivity gains that we've consistently seen over the last decade, where our lambing rates are steadily rising and our carcass weights are steadily rising. That mean that we can produce a lot more lamb with a much smaller flock, and that's been a fairly steady trend over the last, say, 3 decades. So that more on the productivity side, I suppose, is underpinning that growth over the next few years. But I think it's also important to say, while there's growth coming out of Australia, it's definitely not anywhere near that we're in a position to flood the market. More or less, Australia and New Zealand dominate the global market, and the global market will take what it can get out of the two key suppliers. We are yet to see really either Australia or New Zealand really in a position to dampen that with too much supply. So I think while we're expecting increased supply, that it won't necessarily be a negative on market trends necessarily.
Yeah, there's a couple of questions around New Zealand. So yeah, does New Zealand have enough sheep meat to fill their large EU quota? And I guess another related, the reduction in the New Zealand flock. Is that going to improve our share in the EU market? So,
yeah. And that's a really good question. Our share in the EU market's heavily restricted by our available quota. New Zealand has in excess of 10 times the amount of tonnage that we do. And generally speaking, with a few exceptions, we've maxed out our quota into the European market. And then beyond that, the tariffs they apply make it unviable to send any more. New Zealand's a little bit different. They've got a lot more access to work within and a lot more quota. They can send product in. Particularly over the last 5 years or so, they've pivoted a lot and sent a lot of that product out of the European market into the likes of China or a bit more to the US, purely because that's where the market's been. So New Zealand's been heavily underutilising its quota into the EU, even with a reduction in the New Zealand flock. That would have happened anyway, I believe, just because the way the market's been moving of late. Unfortunately, we can't necessarily pick up the shortfall in Europe because we don't have the quota to work within. And that's one of the key arguments that we're pushing for in the current free trade agreement negotiations is having a setup of access or arrangement of quotas that reflects more where the market's at and where the supply dynamics are at than just having this distorted New Zealand dominance in the market.
All right, and there's one around China. What might be the worst case scenario for lamb in China with the current diplomatic fights, and what would be the effect? Would that be in lower price cuts or whole carcasses?
Yeah, it's a difficult one to navigate for Australia. We've seen the beef side of the industry have reduced access this year, and that's all been originated in technical issues, be it labelling or residue levels, but it does coincide with rising geopolitical tension. For sheep meat, we're yet to see any sign that there's been any technical issues that come up that could affect us. Worst case, if we were to get reduced access, it would primarily be on secondary cuts. China is by far our major breast and flat market. They take the bulk of what we send, and they also pay a fairly good price for it. So it won't necessarily affect the sweeter cuts or the higher value primals. It's particularly those secondary cuts. And it's those secondary cuts that can go to China can get a fairly good premium above where we traditionally sent them prior to China coming along. So the alternative markets for some of those cuts like breast and flap or neck or sheep bones would be somewhere like Papua New Guinea or Africa or some Pacific Islands. But those markets have nowhere near the purchasing power of the likes of China for those same cuts. So finding an alternative market that will pay a price would be a major challenge for some of those sheep meat cuts if there was ever an issue with access. But so far, we haven't seen any sign that that's the case. On top of that as well, it's probably worth noting on some commodities, China's got a fairly diverse range of supplies into the market. For sheep meat, it's really dominated by Australia and New Zealand. So we're reliant on China, but also China's fairly reliant on Australia for sheep meat as well.
All right, thanks, Tim. And just one probably final question. How much of a factor is animal health with regards to market access?
Yeah, I think this is fairly critical. If we don't have the right animal health status, all our progress on reducing tariffs and non-tariff barriers is basically thrown out the window. Particularly, we've seen some examples over the last 2 decades where either BSE or FMD has devastated an industry. Fortunately, Australia is yet to have any similar issue arise. But particularly for BSE and the US, it really hurt them in the likes of Japan and Korea. And also FMD really limited, say, the South Americans from actually getting access to some of those lucrative Asian markets as well. So we can see what happens when it goes wrong. Fortunately, Australia hasn't had a case as significant as any of those. But yeah, it is extremely important for us.
Okay, thanks, Tim. Right, we might call it a night there. I'd just like to thank everyone who joined us for today's webinar. But I'd like to thank both Michael and Tim for sharing their experience and knowledge. And I'd also like to thank Penny and Emily for assisting with organising tonight's webinar. So if anyone's got any additional questions, feel free to contact our speakers or send questions via Sheep Connect, and we can forward them on to both our speakers. So yeah, I'd like to thank you again for your time, and have a wonderful evening.